Welcome to Tax Stuff You Should Know. My name is Bob Pluth. I'm joining you today from balmy Chicago, where it's 40 degrees. And I'm joined, as always, by my esteemed colleague, uh, Gene Magidenko. Gene, how you doing today?
I'm doing okay, Bob, and good call in saying it's 40 degrees. So when this recording goes live, it may well still be 40 degrees.
I'll take it after what we've had. Um, if you're
Absolutely.
if you're a first-time listener, this this podcast we try to address topics of general interest that have a tax flavor to them. uh, Interesting, hopefully, to either you personally or to your business. And we try to keep the jargon down to a minimum so that we can discuss it in a straightforward way. Apropos to being in the midst of the Winter Olympics, our mission is to convince you that tax law can be every bit as interesting and exciting as downhill ski racing, but a lot easier on your knees. So, with that behind us, oh, and by the way, the discussion here is for educational purposes. It's not entitled to be or intended to be, excuse me, tax advice or uh, necessarily the views of our law firm, Eric Fox Schiff. So today we want to discuss a very new development. It's actually a case that came out of the Fifth Circuit Court of Appeals called Sirius Solutions. It was decided January 16 of this year by split decision, and it dealt with the limited partner exception to the self-employment tax. And it basically is a case where the Fifth Circuit said that, in their view, a limited partner is any partner that has limited liability under state law. The self-employment taxes are of significance to anyone who has an interest in a operating business that's a flow-through entity, like a partnership or LLC, uh, because basically what it requires one to do is to pay both the employer and employee share of what would otherwise be the Social Security taxes, subject to certain caps, of course, but unlimited in certain respects as well. So it can be a very large part of an individual's personal income tax liability. So what the Fifth Circuit did in this case is it vacated the tax court's decision, uh, where the tax court, relying upon a case called Soroban, Soroban, Capital Partners, that the tax court decided in 2023, um, on the basis that a limited partner, for purposes of trying to apply the self-employment tax rules in the Internal Revenue Code, um, really needed to be more of a passive investor, which meant that the court looked at a functional or made a functional inquiry into the partner's activities to determine whether or not the exception applied. So just because you were a limited partner, sort of as a matter of state law, didn't necessarily mean that you were exempt from the self-employment tax. Um, this same question, by the way, is currently under consideration by the First and Second Circuits uh, in cases called Denham and in the Soroban case itself. So, Gene, I don't know if you want to make any other introductory comments before we get into the nuts and bolts here.
Yeah, I think this case is a very interesting case study, if you will, in how fractured tax law or really any federal law may get, depending on the state of the law in various circuits. So, for instance, you have the Soroban capital decision coming out of the tax court in 2023. It's a precedential decision, meaning that the tax court generally will follow it in future cases, It can be overturned if the entire tax court, so essentially the whole complement of active judges, will reconsider the decision, but it is extremely rare for that to happen. And so there's this tax court precedential decision applying the so-called functional test, and we can get into that in a little bit. But basically, the Sorbonne decision looked at what the actual functional role was of the partners with respect to the partnership to determine whether that person was a limited partner or not a limited partner for purposes of the self-employment tax exemption. And this functional test is more of a facts and circumstances test, a very different tack from what the Fifth Circuit took in Sirius Solutions. But what's interesting is the tax court is a court of national jurisdiction, meaning that its decisions will be applied with equal force geographically for the most part. There is the so-called Golson rule in the tax court, named after the eponymous case out of that court, which said that even though the tax court will generally follow its own precedents and its own modes of approaching cases, if there's a directly contrary court of appeals decision, then if there's a tax court case which is appealable to that circuit court of appeals that has the adverse precedent, that the tax court will, reluctantly, perhaps, but nonetheless, will follow the court of appeals ruling. So if the Serious Solutions decision will remain good law, in other words, if it's not changed in some way by an en banc decision of the Fifth Circuit, or if there's a different, a contrary Supreme Court ruling, then going forward, even if there's a tax court case where generally the tax court would apply a functional analysis, if that case is appealable to the Fifth Circuit, the tax court will follow the Serious Solutions rule instead.
It's really interesting. So, Fifth Circuit, including Texas, for example, um, we might well end up with a situation for some period of time, or maybe for some long period of time, um, where taxpayers in Texas uh, pay no self-employment tax, whereas taxpayers, say, in any other place of the country or outside of the Fifth Circuit, might well be subject to self-employment tax, right?
That's right.
Very, very interesting. Um, so let's set the table here with a little bit of background. Um, the Self-Employment Contribution Act, which was federal tax legislation, generally imposes this tax on earnings from self-employment, and it's comparable, as I mentioned earlier, to Social Security taxes on wages. And generally speaking, for partners in a partnership, and when we talk about partners, we're talking about any sort of entity that is treated as a partnership for tax purposes, including limited liability companies, limited liability limited partnerships, as the Sirius case dealt with, as we'll see in a moment, limited partnerships, general partnerships. For any of those folks, generally speaking, self-employment income includes the partner's entire distributive share of trade or business income that's carried on by the partnership itself. And there was an interesting exception put into the code many, many years ago, back in 1977, as I recall, that basically says, for purposes of applying that general rule, limited partners are excluded from the distributive share of having to pay tax, I should say, on their distributive share of any item of income or loss of a limited partnership, other than amounts that come through as express guaranteed payments uh, to that partner for services actually rendered on behalf of the partnership. Uh, and uh, only to the extent that, those payments, or because of the fact that those payments are in the nature of remuneration for services. So guaranteed payment would be a situation where, Gene, you and I are partners. I become your partner, and you and I do a little business venture off to the side, and we agree that I will receive $10,000 a year, sort of fixed, in addition to maybe splitting the profits of the business with you 50-50. That's a fair example of a guaranteed payment, right?
That's right.
So if we make $100,000, the first $10,000 comes off the top to me. Um, that unquestionably is net earnings from self-employment. The the question here is whether the remaining my share of the remaining $90,000, or 45,000, might also be subject to tax. Um, And interestingly, this exception was put in for a practical reason many years ago, because Congress didn't want folks to be able to take advantage of the Social Security system, game the system by affirmatively uh, seeking benefits uh, as a result of getting distributive shares of income and gain from investment partnerships. And thus, we have this exception that, generally speaking, a limited partner that would normally be an investor, or oftentimes be an investor, doesn't pay the tax, and as a result is not entitled to uh, any benefit once they receive retirement age in respect of their distributive share, unless they provide services and get a guaranteed payment. Now, just very quickly, Sirius Solutions, here are the key facts. The entity it was is involved in providing consulting services. It was formed as a Delaware limited liability limited partnership. Sometimes we'll refer to those as a triple LLP. The interesting thing about that form of entity is, unlike a normal limited partnership, where there is at least one general partner that has uh, personal liability for claims against or liabilities of the partnership. In this case, even the general partner is absolved from liability when a triple LLP is used. It did have Sirius did have a sole general partner, which itself was a Delaware LLC. Um, all of the service providers involved at the company level were limited partners as individuals, and to be a member of the GP, you had to be a limited partner, but not all limited partners were, in fact, owners of the general partner interest. Um, Interestingly, in 2002, in connection with uh, moving from a traditional limited partnership to the triple LLP structure, each of the partners had to sign what's called a statement of qualifications uh, as "quote unquote" general partner of the entity. Now, that was for state law purposes, but the Fifth Circuit didn't put a lot of weight on that. The other thing of interest in this case, which I don't know about you, Gene, but it's a head scratcher for me, is the facts recite that the general partner, even though it had somewhere between a uh, 0.65% to a 0.75% interest over the 3 years in question, this came up on audit, did not receive any of the service income that was generated by the partnership. So I- it's unclear whether there was any other income generated. Doesn't appear to be. So as a result, it doesn't appear that the general partner entity was compensated in any way for acting as general partner. Gina, did you read the case the same way?
Yeah, I did, and the same thing struck me, Bob, that it was, a bit peculiar, and it's very possible that, not all the relevant facts made it into the Fifth Circuit opinion. But it would definitely be interesting to know really what the compensation arrangement was.
Yeah, it is interesting because one of the things we always pay attention to when we set up uh, entities. This was back in the day before we had what we now call affectionately the check the boxy election, where you can basically mechanically check a box as to whether or not you want a partnership or an LLC of any sort to be treated as a flow through entity or uh, 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 a corporation. Um, but back in the old days, we always used to be a little concerned about how big of an interest does the general partner have to be respected as a true general partner for state law purposes. Because if you have a what purports to be a limited partnership, but no general partner that is respected, is authority for treating all the partners as general partners. Sort of, you've got a busted limited partnership. But in any event, none of that was discussed or mentioned in the case. Uh, the general partner also had its own board, which ran ostensibly the general partner function, but the board didn't formally meet, so there wasn't a lot of formality around this. And interestingly, each limited partner, as you would expect, has was subject to a non-compete arrangement and worked exclusively and extensively for the partnership. Um, and there was finally a stipulation by the parties, that is the taxpayer and the government, that each of the limited partners uh, delivered services on client engagements, developed the business, supervised staff, billed hours on client engagements, uh, selected the staff for specific engagements, negotiated client contracts, and basically participated in decisions to hire, evaluate, and fire staff. So, in other words, they apparently function as you would expect a general partner to function in all respects, but they had the limited partner label as a matter of state law.
And you really couldn't come up candidly with a worse set of facts, for a functional analysis,
I
which is very interesting.
agree 100%. 100%. Um, cutting to the chase, the majority, and this was a split decision. There was a fairly robust dissent by one of the three judges, um, but the majority basically said, "Look, a limited partner is a limited partner, and the hallmark of being a limited partner is you have limited liability." And the court looked to um, the many years of 1040 Form 1040 tax return instructions uh, that basically said the same thing, and as a result, it rejected the dysfunctional slash facts and circumstances analysis that the tax court undertook. One of the interesting sidelights here is the majority also relied on a fairly recently decided U.S. Supreme Court case that is quite interesting called Loper Bright Enterprises versus Raimondo. And that was decided in 2024. And it basically held, the court did, that under the Administrative Procedure Act, um, it there's a requirement for the courts to exercise their independent judgment in deciding whether or not any federal agency has acted within its proper scope of statutory authority. And the courts may not, and certainly not only do not have to, but they may not defer to the agency interpretation of a law simply because the statute is ambiguous. And this basically overruled the longstanding precedent in a case called Chevron, whereby administrative agencies like the Treasury Department, IRS, were given, very wide berth to come up with rules and regulations that put the gloss on the statutes that they are supposed to be administering. And so it's sort of interesting. I think it's the first maybe major tax-related case to focus on Loper Bright, and the Fifth Circuit in this case, mimicked that language and said, "Look, we've got to exercise our independent judgment to determine what any statutory provision means." They say that they went on to say, however, that agency interpretations are particularly useful to determine a statute's meaning, particularly when they've been longstanding and they were issued contemporaneously with the statute at hand. And so in this case, the Fifth Circuit sort of took that test that was articulated by the Supreme Court and beat up the IRS with it to say, look, for many years, your instructions for 1040s did not have this gloss for limited partners that is, now embedded in the tax court's functional analysis test. But Gene, maybe we should get into the functional analysis test a bit regarding the tax court's jurisprudence in this area.
Yeah, and it's sort of an interesting bit of history involved to some degree as well. So historically, the definition of limited partner for self-employment tax purposes was just not defined. It was the statutory language. There was an abortive attempt in I believe the first part of the '90s to issue guidance, and that didn't really go very far. In 1997, Treasury and the IRS issued proposed regulations on the definition of limited partner, providing certain safe harbors, allowing, in some cases, even someone who does actively participate to bifurcate that person's interest into, kind of a limited partner interest and a non-limited partner interest, and with additional gloss. For various reasons, there was a lot of pushback. In fact, Congress enacted a one-year moratorium following the release of those proposed regulations. And once the moratorium was only for 1 year, it was not extended. However, perhaps one of those situations where the IRS was once burned and twice shy. They did not proceed to finalize the regulations or try to issue new ones, and so we have these older proposed regulations from '97 still out there. And occasionally in planning, uh, advisors and taxpayers would be looking to them as a guide, and perhaps to some degree, the IRS would be inclined to follow those regulations. But in the cases that have emerged over the last few years, the tax court has really reinforced this functional analysis, which to some degree may be less taxpayer friendly than the regulations, the proposed regulations themselves, because the functional analysis really looks at what is the function, what function does the partner perform? Is the partner involved in managing the partnership's business, or in performing services in the case of a
Mhm.
service partnership? Or is the partner's function really that of a limited investor, of a classic passive investor? And so the tax court's analysis in the recent cases, beginning with Sarban Partners, was really what are the facts and circumstances surrounding the partner's work for the partnership. And then based on that, a judgment would need to be made about the extent to which that partner is a limited partner for SECA purposes or is not a limited partner. And this line of cases really, I would say, beginning with Sarban, although there were a couple cases preceding it by about a decade, where you can already see the sort of the early stages of the functional analysis really being applied. But I think in Sarban Partners is really where it came to a head. Is creating perhaps a little bit of uncertainty for taxpayers as a result, because there's no bright line rule. Sorbent Partners, in fact, could be viewed as perhaps somewhat adverse against those proposed regulations. That it's not clear that even following those proposed regulations would necessarily keep you outside of Sorbon's reach, and so it really created a situation where, although the analysis itself on its face seems simple, are you actively involved or are you not? When you really dig down into the details, in some cases it may be a clearer answer, to be sure, but in others it could definitely be more muddled. And this is where the Fifth Circuit's decision in Sirius is very interesting, because it does represent really a tectonic shift in this area of law, by providing a far more bright line rule, while also perhaps creating an opportunity for the donut hole to swallow the donut itself.
Mhm.
And it'll be interesting to see whether the first or the second circuits will follow suit in adopting the tax court's functional analysis test, or following more along with the Fifth Circuit and looking at this from more of a state law type of perspective. Does the holder of that partnership interest have limited liability or not?
It really is fascinating because most state laws are, particularly for their limited partnership acts, look to some variation of the model revised Uniform Limited Partnership Act, which makes it very clear that a limited partner can lose limited partner status if they get embroiled too much in the management of the business. Uh, Typically, a limited partner is purely passive. Think of your typical real estate deal. You put some money in the deal. The general partner runs the deal. You don't have anything to say about how the partnership is managed. But once you start creeping towards more and more activity, and it could start out with maybe certain fundamental veto rights, just to put some checks and balances on the general partner. But the more the limited partner is involved, the more possible it is, or likely it is that, if the matter went to litigation, a limited partner might find that he or she's crossed the line and they really are functioning as a general partner, which is the irony, the supreme irony of this case, it seems to me, because the Fifth Circuit, while it acknowledged this problem, or potential of state law, creeping general partner status, was hoping to come up with a bright line test, because the tax court's test was not a bright line test. I just am interested to see whether there's ever a bright line test, given the nuances that you and I see on a daily basis with partnership agreements, LLC agreements, etc. Um, just to mention to our listeners here, just for a moment, under the proposed regulations, they were basically struggling, among other things, and with the then relatively new kid on the block being the LLC, limited liability company. So the question came up, and it was a practical one. Well, whatever clarity or not lack of clarity there is on limited partner, what the heck does this test mean, if anything, to a member of a limited liability company, particularly a member that, let's say, has no voting rights in a manager managed limited liability company? Uh, Do they look like a limited partner for purposes of this very rule? It was a real serious question that people were trying to get some clarity on. And Treasury came up with these proposed rules. They basically said, we're going to treat anyone, everyone, like a limited partner, including a limited liability company member, unless you have one or more of the three following characteristics. Unless you have personal liability for the debts of or claims against the entity by reason of being a partner under state law, kind of an easy one. Number two, unless you have authority under the law of the jurisdiction in which you're formed to contract on behalf of the partnership. Again, pretty straightforward because you would expect that only a general partner would have that authority. Or, and this is the more interesting one perhaps, if you participate in the partnership's trade or business for more than 500 hours during any taxable year. So there, the Treasury was trying to come up with a workable bright line test. And as you pointed out, Gene, the tax court in Sorbonne didn't really apply that test. They basically had their own more uh, subtle test. You know, if you're active in the business, whether or not you've got personal liability, that's irrelevant, or whether or not perhaps you even have authority under state law to bind the entity. But if you're active and you're holding yourself out as someone that has authority and or you're providing substantial services, then you're not a limited partner. And it's it's not surprising, and where the rubber really, meets the road on this is in Sirius, we have a purely service related entity. You've got a handful of partners making, sounds like, pretty good money, uh, uh, millions of dollars amongst them in income from their personal services, and you've got nobody in this structure that's subject to either Social Security tax or self employment tax. Now, when you take that and overlay it on the realities of today, where we have a smaller and smaller workforce, um, being taxed to provide benefits for a larger and larger group of retired folks looking for that benefit, and relying on that benefit, something's going to have to give if all of a sudden um, the takeaway here is this is the new test. Either Congress, you would think, would have to act, or because guys like us, I suppose, Gene, we would be advising folks to seriously consider the triple LLP or maybe a traditional LP structure, and have a general partner that purports to be the only active partner for purposes of doing this analysis. What do you
Yeah,
think?
I completely agree, and and I think at least as of now, we're perhaps in a bit of the an uncertain zone
Mhm.
about really what the state of the law is or will be. I mean, plainly for taxpayers in the Fifth Circuit, there's a serious decision, and that could represent a very powerful planning technique. It'll be interesting to see what other circuits do, whether they follow the Fifth Circuit's reasoning and reach the same conclusion, or whether they'll go with more of a functional test. And then from there, if you have a circuit split, it may well end up going to the Supreme Court for ultimate decision. And so I think it's one of those areas where it is absolutely worth keeping a watchful eye on the state of the law because it is definitely in flux,
Mhm.
but perhaps a little too soon to really make any significant structural changes to businesses, at least in most cases in the absence of perhaps more firm guidance. But obviously, the situation is a little different for taxpayers who are in the Fifth Circuit, where you do have the serious decision, and at least for now, that is definitely the law for the taxpayers in those states. But I think outside of the Fifth Circuit, which represents most of the country, As of now, the sort of the going rule is the functional analysis test, but that may change depending on how the Denham case or the Sarabin case up in appeal are decided.
Yeah, fascinating. I think that's really good advice, Gene. The even though it's not advice, legal advice, for formally, but it is really interesting. I mean, you mentioned a few moments ago that it is a uh, really kind of tough case. You would think tough set of facts for the taxpayer to win on. On the other hand, uh, the fact that these excuse me, not temporary, but proposed regs have been outstanding for 29 years with no ultimate guidance to taxpayers, um, really sort of invited the Circuit to beat the IRS over the head with the admonition in the Loperbright case that they're to give special deference or significant deference to longstanding policies of the administrative agency, and the administrative agency hasn't had a formal policy for now almost 3 decades. So very interesting. I think you're absolutely right that we need to stay tuned and see how this shakes out.
And it's certainly possible that there may be congressional action or even agency action to, proceed with rulemaking, or in the case of Congress, to clarify the law. I think as of now, I don't know that I've seen any, sort of viable proposals congressionally that have gotten too far to amend this, but it's very possible that as we get circuit courts weighing in, and potentially even the Supreme Court, depending on what may happen going forward, it is possible that Congress could act at some point in future too.
Absolutely. Well, very, very interesting as always. So, folks, that's our installment for today. Um, if you have any topics of interest that you'd like us to perhaps talk about in the future, you can reach out to us at tax stuff at afslaw.com. And you can also uh, find in the show notes to today's installment uh, references to the couple of cases that we've discussed here today, and just for fun, we'll throw in the proposed regs as well. So until next time, we'll we'll see you then.